Good morning, traders, and a happy Wednesday out there to everyone. Hope that y'all had a good evening there and are all ready for this nice day in front of us, right? The midday of the week, right? Hump day. But with that said, as per usual, right, I always like to make note of any items that of our significance on terms of our economic calendar there. For our purposes today, fairly reasonable on the board. Nothing of too much significance, but we do have existing home sales at the top of the first 30 minutes of the pit session. The crude oil figure, as well as FOMC meeting minutes there at 2 o'clock. And then just to add into the mix there, we do have a 20-year bond auction as well that will be due out at 1 o'clock p.m. Eastern Time. So a few items on the board there to take into account. But with that said, we can come over here and jump into our daily chart here, in particular with the S&P, which proceeded to close still slightly below the previous day's high at the time, so still maintaining ourselves in balance. However, extended run to the upside is still intact. We still have yet to close on the other side or below that daily 5 SMA, and here we have it coming in at 53.31 basis, these S&Ps. So relatively contained. What we did see overnight is that we looked above the old 53.49 by one tick. So we made a higher high, took out the previous high test in the case of our futures there. So not by too much, but we did get that out of the way. So we traded up to 49 and a quarter. So checking that off. And then we've spent a bit of the Europe session morning just consolidating a notch. So we can also, it's always good to take into account as well what we had unfolding overnight from where we closed yesterday in the pit session. We had Asia as the one that made the new high, right? Took out the 49, and then into the Europe opening. My Europe session, for the most part, would say it's been trading from high to low, so no major back-to-back sessions to concern ourselves with there, but some nice activity from the Europe session. So outside of that, once again, daily 5 SMA would come in at 53.30, and then the low that we put in from yesterday, which we didn't spend much time down there, right, when we took out or tested down. It was short-lived, so also good to have on the sheets, even though it's a ways down there. The 53.22 there, basis these S&Ps. So nice balancing act. Got the high test out of the way in the overnight session there, pretty early on. So gives us plenty of room to work with there. I'll scroll our data back just a notch. So we'll keep in mind that essentially Asia tested up. Europe brought it back down, so we have a nice open door coming into our U.S. morning session, right? Over here on the 120-minute display or the hourly charts, it doesn't really shift the view all too much. It just now shows this high test as having, even though we did take it out, yes, more along the lines of 3 separate tests and data points up there at this 49 mark, right? We had the 49, then it was 48 and change, and then it was 49 and a quarter. So those 3 high tests, not too much excess coming in through those points. So what we're doing is just kind of working ourselves back and trading inside that previous day's range. Greater cause for concern. Where this would start to change a little bit more in tone, it's obviously ways down there. 53.05, right, would be kind of more of the caution zone for that of the S&Ps, simply because that's where we were having the range expansion to begin with to the upside, the one time framing mode. So obviously we're holding a smooth 30 points up above that for the time being, but in terms of where things would start to shift or be of greater concern, that's kind of what we're working with there on the 120-minute display. But nice for them to get their high test out of the way, so we could check that off. And then there's always, of course, the idea of seeing as to how we want to handle that in the U.S. morning, right? We made the high test overnight, so sometimes we also like to take into account how we handle that in the U.S. session or our pit session display. So good items to consider there. We have the DAX next in the queue, right? DAX has done some testing as well here, right? We've been putting in these tests on the lows here as 18,708. We've been testing back on the other side of that daily 5 SMA, but ultimately working with a better degree of price bar overlap, right? So here with the case of the DAX, we have the previous day's low, 18,710, 18,708, the low from 2 days prior. So when we come over here to this 120-minute display, first of all, we know that we've completed the two-part wave, right? The ABC down on the hourlies or the 120-minute charts. And if we scoot this just a little more to the right-hand side, we can see, for one, right beneath these tails that we've been trading this week, right underneath them, we have this 18,691. We get our little drawing tool here, right? Because we had these two high tests here before, thus accelerating and getting an impulse bar through the zone, which helped, stem some of this better movement that we've been having. So as we come back in the DAX, you have one low, two low, but also more importantly, or a little more visible, is this previous congestion zone that we had left over there on that 120-minute display. So like that time frame to serve us there in the case of that DAX future, and that's what we're coming into the session with on that side of things. All right. So that's our S&Ps and the DAX respectively there. We have our currency group next in the mix here, the EC. Also kind of, taking its time on the approach here. But as we'll see, similar to kind of what we've been seeing in the bonds, right after having our range expansion bar to the upside, or a little bit of trendiness on that bar from the 15th. We spent quite a few days kind of trading inside of that bar, meaning the past 4 trading days, and now day number 5 trading inside of this one particular bar, which was from 90.15 down to 82.85 in the case of the EC. So essentially what we're doing is filling in some of the blanks here. We came down and we did accelerate through. This was kind of the caution zone, 1.085, call it 84.95 to be exact. So we kind of went through the zone. Didn't test it all too well, just kind of moved through it with a decent momentum. So if we come over here and look on the left hand side, just in terms of this area that we're trading in between 1.08230, 1.08495, a little bit of a window or a previous region there for us that we had there in the euro currency. So this really showcases the nice, 1 day low to high, right? And then real strong acceleration. So it's taken us some time, but we have done a pretty fine job on, filling out the blanks from that particular bar. So between that 1.08230, 1.08285, those are going to be our little initial areas to see how we want to respond to those points in the case of the euro currency. But nice in the way that they're, stepping it back, filling out some range from that initial impulse or advancement that they had there. So that's the 120-minute view there with the euro currency. And then we have the gold here. Gold, as we know, closed in balance there at the top of the swing yesterday, meaning 3-bar balance mode. We are still on the extended run, to the upside here in the gold. So we've been working on trying to balance a notch. We tested, did not close down there, the daily 5 SMA, and do really like this hourly structure here in the gold, just in terms of its nice swinging activity that we've been having, right? Our nice push down off the highs, one lower high, one lower low, second lower high, and then we came in and tested, but didn't really spend too much time here at this 2408 and change with that of the gold. So watching in here, we can also see it in the oscillator, the nature of the tightening in the length of the swing. So even though we tested the zone, if we were to come back and trade beneath it for a second time, that would not be too constructive. But for now, I've got to give them a little benefit of the doubt of trying to hold their own there. So whether you do like a 30-minute or a 15-minute data, the way that it shows these previous spike tails that we were leaving there in the gold, pretty curious there. So a nice short-term test, did not close down there, just gave it a little test reject, and we'll see as to how we want to treat that early morning session there with the gold, the type of movement we get off that 8 a.m. reading, like those hourly charts. So that's the GC, and then we have the crude here, which has its EIA data today, or its 1030 figures report. So here with the crude, right, as we know a little bit more of the bracketing phase, just being more prone to the test rejects on the upper and lower end of the range. Quite a lot of price bar overlap, as we're well aware. So we can see that in terms of like major follow through on these daily bars, we had not been getting too much of that. And then we've essentially gone from, getting a better job of doing so, right? 3 days of low to high. And now, interestingly, we've been kind of working ourselves back in a very similar format, right? 3 days of low to high and working on what will be the third day of high to low in the case of that crude. So filling out some range, as we'll see on this 120-minute display, it also kind of really puts it into a good view. We know that we filled in the rest of our zone from our low developed area, but as we come down towards these zones, do like to be just a little cautious with that at the crude, right? Because all these tests on the lower end, we end up testing it and then having like a good counter reactive lift when we come off of those zones. So we're back into this area here with the crude. We do have some mild structure here on this 120-minute oscillator to keep in mind there, a little bidivergence or loss of momentum that we have there. So since we've tried the lower end of the range out, we'll see any counter-reactive lift, 78.29s, that 120-minute moving average, and then naturally, right, caution area. Interestingly, though, where we came in, it's this overnight low, pretty close. This 77.35 is in reference to these two data points that we had here from the trading on the 12th and the 13th in the crude. Right, so we did come down there and give that a pretty good test. So that's where we're coming in there with. I think the 120-minute or the hourly charts really kind of shows the nature in which we've been having our two-way swings, kind of oscillating through a central value point there, which we can also see, or which we saw on the market profile visual, right? When we spend a lot of time oscillating back and forth, it ends up showing up as a bit of a volume node. So that's a little bit as to what we have going on there with the crude. And then lastly here, and last but not least, are those of the bonds here. Another group that closed in balance yesterday. Quite a few of them there. So in the case of the bonds, almost like that of the EC here. It's not exactly perfect, but the essence is similar. If we're looking at these two bars here from, in particular, the May 14th to May 15th, those 2 bars of acceleration that we had in the bonds. If we come over here and look at those same points, the 14th to the 15th, and that of the euro currency, so very similar, if not the same. Impulse up, or 2 days of low to high. And in the case of the EC, as we know, right, we're just talking about the fact that we've been kind of working back some of that impulse bar, and to compare up against the bonds, right, it was similar, right? We've already traded on the other side of our impulse bar there in the bonds, but just to kind of note, the spurious correlations between those two on the daily charts. All right, but outside of that, back to just the regular bonds here. We know we're still pushing into this big previous price bar overlap, little mini volume node in both the bonds and the 10-year notes. So we came into the session in balance. We have been working with some range expansion here early on, so I'd like to keep an open mind here in these bonds just because we did have 3 bar, and so far we're trading from high to low. No higher highs for them either. We have the 1, 2, 3 pushes down. Boom, boom, boom. We had the counter-reactive lift yesterday. It did not really do the greatest job on sustaining here, so we're working on that A portion up. And now we have the test back down, lower low for that B portion of the 1, 2, 3. A, B, C type of wave structure there with that of those 120-minute bonds. Alright, and with that, we're going to grab these charts, dialing them back here, get our normal items back and loaded, get a couple things adjusted, and then we'll have ourselves a nice morning session lining up in front of us. No major economic data there, as we mentioned. What we're going to be looking at there is existing home sales at 10 o'clock, the crude figure at 10:30, FOMC meeting minutes at 2 o'clock, and then the 20-year bond auction as well as right before the meeting minutes at 1 o'clock Eastern. So in terms of the fixed income groups, we'll see how those respond to that. And with that said, we'll get these things adjusted and see what type of movements here we get off of this early morning 8 a.m. reading.